following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we'd like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Is that it? Anyway, today's very special episode of the Power Trading Hour is entitled, What If They Gave a Crash and No One Came? Well, we were off about 20 points on the S&P cash, about 12 points off the low of the day, down 9 points right now. Volume is just a little under 0.2 billion shares on the New York Consolidated Tape. So did we have any kind of juice? Well, a little better than yesterday, but it just wasn't that much. Many times you get into these kind of patterns. Someone brought it up in the den today where you see everybody sell in the morning and buy in the afternoon. And generally that pattern, I've come to see it as people shorting in the morning and covering in the afternoon. When I came back, I guess it was, Tuesday or Wednesday, the day after we came back from New Year's vacation, I said we were kind of stuck in this area. Had some people ask me, I think maybe I said it yesterday or the day before, asked me what I meant by that or how I could come up with that kind of call, which I'm going to take a little victory lap that, a week later, we are more than a week later, we're still treading water within 0.5% on the S&P cash. The answer is many things, but one, a handful of stocks testing highs, a handful of stocks testing lows. Normally, if you're going to go higher, go lower, you've got a lot on one side of the fence. You don't have just a few. Next, you have some kind of participating event, everybody looking forward to something. And we've been waiting for things, but not looking forward to something. So that's kind of another thing. Very nervous markets that move fairly quickly on news, but then kind of stall out, kind of as we have done today. I'm not going to be surprised if we close at 2270 again on the S&P cash out here today. But again, as I've said a couple of times during the week and last week, I think if you are bearish, what you want to do is you want to see some big, huge move to the upside that wastes all the early shorts and then turns into nothing on vapor on the volume on the upside. So for me, that's probably going to be 2,300 on the S&P cash, and I'm not predicting that the volume will fall out. I'm saying that you need to wait and see the volume fall out, probably somewhere around that 2,300 level, and that's certainly going to push the Dow over 20,000. It's hard for me to see how we don't, even if it's on light volume. So I think prudently, as we've said before on the show, most of the time, if you're going to short, you're going to be short early by a number with a 3 in front of it. 3 minutes, 3 hours, 3 days, 3 weeks, 3 months. And if you go past those levels, you really have to start looking at what's going on inside your own mind if the market does not agree. Are we coming off a little bit? Was volume real big at 2275 when we've been up in that area on the S&P cash? The answer, it's been okay, but we've had lighter volume on the pullbacks. We're going to have lighter volume today on this pullback. There is no big consensus in the market that we are going higher or lower. Now, what I like to show is a chart for options, and we're going to get into that later. In the meantime, we need to get this party started, and we always do so with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1954, in a speech at the Council of Foreign Relations in his honor, Secretary of State John Foster Dulles announces the United States will protect its allies through the deterrent of massive retaliatory power. The policy announcement was further evident of the Eisenhower administration's decision to heavily rely on the nation's nuclear arsenal as the primary means of defense against communist aggression. And on this day in 1954, deep into the Cold War, are we drifting back that way? Kind of hard to say, but we'll have to keep an eye on it. Anyway, very little news out here. We've got a few stocks that were generating some, so we're going to look at that, and we'll get into it. As news for subscribers of Art of Timing the Trade Charts, there is a brand new version out. We'll be probably promoting this to additional retail customers next week. But if you have a subscription to the Art of Timing the Trade Charts and you haven't gotten your download link already, make sure and check your email. If you haven't, please send an email to charts, that's CHARTS, at TFNN.com, and we'll get you hooked up and try to think anything else. But anyway, we got a brand new shiny version that I've been working on since in kind of late August of last year, updating it for yet another decade of great use. And it's basically the only thing I use. I've written it for me, although it has a great many things in there from the Art of Timing the Trade book from Tom O'Brien. So you owe it yourself, if you've gotten Tom's book and you've read it, to go through it. And we got some new shiny new features we'll be showing off and pushing around here fairly soon. Okay, so what I was going to talk about, some of the stocks with actual news, not like the fake news of yesterday, where it's just all made up, and the people knew it was made up before they reported it. Kind of weird. What do we have? Fiat Chrysler opened higher, instantly reversed, and got down as low as $9. I don't know if that's a real tick. A little bit over $10 now. There is an accusation from the EPA and the Justice Department that Fiat basically did a VW. They, in contrast to what VW said, they kind of admitted it. Fiat says, no, didn't do it. And this apparently has been going on for about a year, the investigation. And a lot of people just think that maybe this is a little bit of retribution for somebody that could not get the goods on somebody. So they're throwing rocks 10 days before they leave their positions. A lot of politics coming into the last few days of this administration. I'm sure we'll hear more about it, but a lot of people are discounting this, thinking it's a little bit of sour grapes, maybe from the EPA, maybe why it recovered $1 earlier today. When we get back, we'll talk about a big gas station as another big improvement. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. We're going to go to Ron in Denver. How you doing, Ron?
Hi, David. How you doing, sir?
Another day in paradise.
I just was wondering if you'd comment about Cummins, Charles Mary Ida, CMI.
Mm-hmm.
It made a wild drop today. It was off about $6, and it's come back. Is that what are your thoughts as to how low would it go if you were trying to get into it? Where would you
Well,
wait?
you certainly would have wanted to buy it when it was down under 135. That's kind of where the support line is. You've got it going back to what is that? The 16th of December. Then you get back down to about 135 again on the 29th. Volume's kind of light. You came down with a little bit more volume, but rejected it out here. My guess is this is moving back up to 147. Are you in this already?
I got out here about 141 here a while back, just a few days ago.
Yeah, the
but
problem
I was just
is
wondering.
Yeah, the buy point for risk rewards is 135. So
Okay.
You kind of needed to be buying it down here today and just looking for the reversal, which you got. That being said, you going from 135 to 147. So that's $12 on $135 stock. That's $10. You kind of had to look at the downside on this being if you got it at 135, the next support level comes in at 130. So you had $5 down, maybe $12 up. That would have been hard for me for the risk reward.
Okay.
I would have liked to seen something that had, maybe the downside being 133 or 132. Something that gave you like 3 for $12 to the upside.
Yeah.
So that's
Well, if I'm looking for maybe an option spread, I'd go into it around 135.
well, certainly you'd want that to come back down to one more day with light volume. And with this little spike today, you might get it. You may get this thing pulling back over the next week or so. Of course,
Okay.
I have to say that any kind of projections that I make right now, when we get into earnings next week, you're going to see probably a big and different complexion to the markets. We're going to start tomorrow with J.P. Morgan and Bank of America. So we're going to get some of the financials. We got some of the bigger tech stocks next week. So to me, if we're waiting anyway, I'm not going to get too far on the limb out here until we see what earnings are really starting next week. And as we get into the 22nd, just a landslide of them. So,
all right.
Again,
and the overall, are the expectations for earnings are going to be on the positive side, negative side, or do you know yet?
Well, I'm going to tell you, I was before you called, I was talking about looking at options.
Uh-huh.
And I will show you this because it's germane to our conversation. Right now, let me zoom in here. If everybody's watching on Tiger TV, hopefully. Right now, normally on options, even when the most amount of money can be and is lost a week from tomorrow, right, on monthly expirations, it's $2-3 billion is still being paid out. And, a lot more than that goes in options that are go unexercised. So they still make money. But we are down here at about $200 million, $300 million on the SPYs. And this thing is flat, way out, which tells me that the option market makers have absolutely no idea about what's happening either. So normally you get a clue. They're probably the best traders out here. The only thing that you see is if you actually zoom in, they're betting a little bit farther down come February. They're looking at maybe 40 S&P points down. So they're expecting whatever happens in that last week of January, they're expecting us to pull back right now in February.
Okay.
So the answer to your question is probably okay, but if they don't really blow out, then maybe a lot of these things are going to have a pullback into February. That's the only thing I see now.
Well, I appreciate it. And that's all technical. And then on the fundamental side, all we need is a Trump tweet, and who knows what the market does.
Yeah, I don't think now, yesterday, I think was a very special occasion, and that was that he was trying to give political cover and cause enough news and screaming and yelling so that everybody wouldn't pay attention to kind of partisan fighting in the cabinet. So, they had more than one thing to talk about, so they couldn't just spend 30 minutes talking about one thing yesterday. I don't think he's going to be doing it all as much as he has. But when everybody tries to distract, he's better at distracting than they are. And I think you're going to continue to see that. So if you see some kind of phony story come out, I think it's a good heads up that you're going to start seeing some tweets come out, and he will be firing back. And so that may be the best warning sign that you had. A guy told me when I was down in Mexico driving, he said the first thing you watch for a chicken running across the road. He says, because there'll be a 5-year-old kid chasing it behind him, and you'll run over him. So make sure, he says, they are the soccer balls down there. There is always a sign of something going on. And that chicken running across the road was the sign that the little kids were chasing them. And that's the same kind of thing. We start seeing kind of bizarre stories like we saw yesterday that are just meant to inflame. He'll probably come out with both barrels firing and make some news of his own. And it will, in a couple of days, will anybody have remembered it? No. But it's just a big PR war. But on a daily basis, I don't know how long you could hold a stock if he's got those barrels trained on you, right?
Okay.
If you're long. I just stay, you know that he's kind of after the biotech, so maybe those are the ones to shy away from for a little bit. I still think that the IBB's going back up to $300 here pretty soon. I think there's just too many shorts in it. But anyway, thanks for the call. You can be like this gentleman and give me a call at 877-927-6648. But I suspect that we are going to hold up, and if we are going lower, we are probably going higher first. You can also email me at path@tfnn.com and post a message in the den. Yeah, what else do we have going on here? We're getting ready for a break. When we come back, we're going to start going through some of the 52-week highs, 52-week lows, since we're really not making a lot of headway in getting out of this trading range. Right now, we're just off 7 points on the S&P cash with 2.3 billion shares. So again, volume's a little wimpy to show that this low today needs to be retested. My guess is that they're going to run a bunch of shorts eventually, and we're building enough steam that it may be of biblical scope. More about that when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alcoa, we're going to go through some of these stocks that were gapping up. Alcoa gapped up today, but it doesn't have as much juice as one generally would think. But you know what? It's going to be enough to get you back up to $34.30. And I don't know if there's anything more you can say about that. This thing's just kind of been bouncing around. Just before November, you could have bought it for $21.78. Nice move out here. I wouldn't have seen it. What I really dislike out here is this high volume low, and that takes you to November 1st for $32.20. You got to think that eventually it is coming back to that $21.78. So keep an eye out that for failure up here at these levels. Another gapper, gold, Anglo Gold, UE, on a day where you didn't have a lot of gaps, fairly nice. Volumes okay, not giving you a big signal. Melco Crown Entertainment, another little gapper, but not much out. Merck, gapped up, kind of a little bit of reversal from yesterday. Again, somebody dipping their toe in the water in this sector after the Trumpster comes by with a drive-by tweet on those. Gapping up just a little bit. The IBB up, not a lot of volume out here so far. I think you're going to probably consolidate here for a little while before heading higher still. And UNG was a nice gap up here, but it's coming right up to the resistance level, and that is the third when this gap down with 25.7 million shares up today with this half of that 12.5 million shares so far today. So you probably, if you bought it down there at 776, this is where all the easy money goes away. And the real hard money comes in. Disney, a little bit of a gap down today. But again, right back to support levels, not a lot of juice, not a lot of confirming. We talked about Hess earlier. A lot of discouraging talk from the executives. Got down to 56.65. It's come back a bit, again, a little bit based on the movement of the market. Everybody got freaked out a little bit. I suspect that over time, we're looking at this coming back down to about $49. So I don't see anything that you would even talk about possibly being long until that $49 level. LABU, they're saying things are going to be bad for a year. LABU, nice little turnaround as we talked about it yesterday. Again, every time someone sells something, someone's buying it. And in this case, buying back a lot of yesterday's discussions in the days before. Novo, NVO on this one, I think gap down a little bit. It's just continuing in ABC down. TSM, which is Taiwan Semiconductor. Now, this is important, of course, because this company generally makes all, not all, but they're one of a handful of companies that makes the chips. Most people just design them and give them to fabs like Taiwan Semiconductor to actually manufacture. This gap down, and I have a feeling it has a lot to do with the dollar and its movement today. We didn't get to that. Dollar's down 55 cents to 101.23. I suspect that we are in this area and again consolidate between probably right about where we're at here, which is 101 and 105, but eventually it's going to break out and go higher. I am not an advocate, but a believer that the dollar will strengthen over the next few years. What else? Anyway, we got the gap down with Taiwan, but a lot of that had to do with Asian market movements already. VF Corporation. Now, here's one that I'm starting to look at as a fairly decent signal. I would have liked the energy off this November 23rd high to come back with a little less volume. Energy was about the same way on the way up as the way down. Volume, though, as we're breaking the previous low from October 25th, is less. So VFC on this, testing this on lighter volume so far today. But if the energy on the way down is about the same has the energy on the way up. Normally, I look for some level of consolidation before you start getting a move back up. V bottoms generally come from very light movements on the way back down, not the same or higher volume. Valero gap down a little bit. It's come back up a bit. And probably the most or the biggest one is United States Steel. Again, it's kind of hard to hold these highs. It's back into the very bottom of this consolidation range that goes back to the 2nd of December. Now, on that day, you had 13.6 million shares up. We've got 18 million shares so far today. So that's saying we could maybe get back down into the $28 range for U.S. Steel. I forgot my Chaim Roth were bigger than U.S. Steel drop, but I'll remember it next time. Other stocks, now those ones that are gapping down. Let's take a look at 52-week highs. Again, 22.70.43, just off 5 points on the S&P cash. Again, what if they gave a crash and no one came? Well, that's exactly what happened today. 2.36 billion shares. Now, here is one that is a sign of strength, and I want to keep an eye on this one. When it does come back, it should have some very good support about the $26 level. And this is Applied Optoelectronics, AAOI, every sign of strength that you could ask for. 3.8 million shares already compared to previous highs in the 300,000 and 700,000 share range. What does that tell you? Everybody's getting into this once. And again, we talked about what I think is going to happen, and this is a great deal of it. Maybe the news isn't going to be quite as good as a lot of people think, but there are just far too many people short far too many individual stocks, and it doesn't take much to really jam at home and run a lot of those shorts. But if this could get back down to $26.50, $27 on very light volume in the near future, we'll take a look at it. Other stocks hitting 52-week highs are Box. Never thought much about this company or its CEO. Just a guy that's not inspiring. Let me put it that way. But volume's okay. It's going to match about the previous high out here, October 4th. This is a company I suspect that must be bought out to ever do anything. It can't exist on its own. Of course, the last couple of days, I think kudos to Tom O'Brien for his CCJ call. He bought that, I think, in the 9s or so. It looks to me kind of like a blow-off top here in uranium. Kind of interesting that PBS had nuclear energy specials last night. I thought was kind of interesting. But several uranium stocks out here. Plenty of volume, but that doesn't mean you don't pull back here and get another opportunity to get back in, maybe an ABC up in these uranium stocks. We have a few more of those uranium stocks before close out the day. And some other ones that I'll like. We'll look at some more 52-week highs. As the crash has been canceled, we'll see how the day goes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We're going to continue looking at some of these 52-week highs. And, of course, got that today in CCJ. Few more on my list here that we'll take a look at, but I had some charts in the newsletter this morning. Looked like we were probably going to, at least for this run, we were probably going to see that high either yesterday or today from the charts. In the trains, in the choo-choo trains, CSX, another 52-week high out here today. No big sign out here. Volume is not all that exciting, but again, this is up on a down day. Fiat Chrysler, we talked about that one already. Made its 52-week high and then got slammed. FTI, which is FMC Technologies, hit its high, reversed, and back into the trading range. So you got to watch out for that one. MBT, which is Mobile Telesystems. Nice move, lots of volume. Watch for that one for a retrace. Back at 950 on light volume. That one looks like a valid breakout here, for at least on the yearly. The Mosaic Company hit its 52-week high, pulled back in. Not a lot of juice in that one. MVCC is Club Corp. This one is tracking all the volume in the world. May or may not hold its high. MYCC, the symbol. NICE, another one pretty much hitting its third high out here, this time with some juice yesterday and today. So keep an eye on that one in the next couple of days. That's NICE. And what else do we have had here? RACE, this one tried to break up today, gave it all back. So you want to keep an eye on that. Rio Tinto. This one, again, 52-week high, tried to make its higher high. A little more volume, still did not make it. Looks like it's going to pull back in. Steda Oil, STO is the symbol on this guy. Again, a little bit of volume back into the trading range. These stocks trying to break down, stocks trying to break out are having a hard time. Now, Straight Path Communications, STRP, symbol on this one. Huge gap up higher. Has given most of it back. The question is whether or not it can even stay through the last couple of triple highs around $40 to $41.75. So if this thing comes back in the trading range, that could be the kind of shooting star with all the volume that signals the end of its move higher. STT, which is State Street Corporation, it turtled, it prairie dogged, it stuck its nose out, it did the Punxsutawney Phil and said there's 4 more weeks of winter. and tucked right back down in there. Not a lot of volume on that one. TGB, which is Tasco Mines, with some decent volume again in an ABC. The last leg, though, from 71 cents does not look like it had much juice out here. So I would be worried about that one just because of the light volume on that last leg. Total, T-O-T-L, little doji up here. Man, you got to watch if this one closes lower tomorrow. It looks like it's going to hold the previous high, but by just that much, get smart. And you got to watch. Pull back into that one could, or a nice gap down on that one could have a nice little abandoned baby up there at the top. We were talking about stocks. You had a little spike on uranium energy, UEC. This got to 179, gave it all back and more, and probably looks like you got something. You had 147 yesterday, where it blew that high of June 7th that had 8.5 million shares, and yesterday what'd you have? 7.2 million shares. So you're getting into resistance level in some of these penny uranium stocks. Also, UR Energy, URN, another one, Turtle and Prairie Doggin, Punxsutawney Philin, tried to break out above in these penny stocks in that sector. Gave it back today. Vale, take a look at this one. Now, this one, you would have liked to seen a little more volume like you had yesterday. You haven't closed yet. But going into 37.2 million share, you had 46 million shares yesterday. So you were getting to that high. You're getting there with volume now. Today, 26 million shares as you break that December 8th high in Vale. So resistance to the downside, resistance to the upside, I think continues to tell you why I think we have kind of a range-bound market. Williams Partners, again, a little tear in this energy, but no volume out here on this one. So keep an eye on some of those. How are we doing? Still got a couple of minutes. So those 52-week highs. Let's take a look at the 52-week lows. Of course, the 52-week lows, again, not surprisingly, starting to see these dry shippers as the ones that are constantly on this list. This has been a straight move down from $6.15. And, of course, this was $97 just last month. HIMX, the semiconductor stock, this thing's done nothing but go straight down since the September 23rd high. And not a whole lot of reasons. They make chips that control LCD displays. And maybe they lost a lot of contracts. Hard to tell. I tried to look into this morning and still just didn't see a whole lot of news that could tell me what's going on, other than the fact it just keeps going straight down. Merrimack Pharmaceuticals, another one on the 52-week lows. Playing limbo out here at $3.21 today. Had 3 million shares. Now, this is actually fairly light, but I don't see anything out here. Maybe you get a chance to see this bottom out. But after this destruction, this thing was $9.02 on April 7th of 2016. It's $3 now. You're going to need some consolidation going on. Again, you can give me a call at 877-927-6648 and email me at path@tfnn.com. You can also post a message in the den if you want to look at anything. What else? Just reading some notes here and some emails. Okay, what else we have? NLSN. Nielsen. Now, this is the company that used to have boxes when we had cable television. Now that everybody's got their smartphones and watches on YouTube, does it even matter? Well, making a 52-week low out here, $40.97. We go back and look. It's certainly back through the January 20th lows of 2016. And if we go back a little farther, this thing, in the $39 range can really start falling through. And if it breaks here, the next big move is down to about $30, which would be 25% lower. a big haircut for Nielsen. Just very tough for them, I think, in the future to really figure out how they make a living when everybody, pretty much self-reports what they're doing on internet advertising, and it's a lot easier to target folks on the web. But this thing is at a do or die level here in the next couple of days. NLSN is the symbol.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we'll go through a few stocks out here that I've been kind of keeping an eye on. Never really got a great test of the low in Lululemon from the October 25th low. You consolidated out here nicely, though, so there's no guarantee this thing's ever coming back to $54. What you have done, though, is come right up to this level of the gap down on September 2nd of 2016 that had almost 18 million shares. Got into it with 16.4 million shares on December 8th, and then, of course, pulled back and filled at least part of this gap where this thing tried again on 8th of December. It's back up here. Last time, 16 million shares. A couple of days ago, you had 3 million shares. Kind of playing around. From fairly decent juice off that December 28th low, though. So I don't see a lot out here in this one. Again, What you want to see this thing is probably come up to about $73. And if it has very light volume on there, that would be enough of a gap fill for me to suspect that maybe you're in a bigger trading range, which may not be very bad. $74 back down to $60 might be interesting. There were a few other ones in the that I saw developing out here. Been wondering about these amusement parks. Six Flags testing its previous high with very light volume over the last few days. April 27th of 2016, $60.65, 2.71 million shares. Got into that with just 700,000 shares a few days ago. And again, not really giving you a good indication this thing's ready to roll over, but certainly not a lot of volume at this previous high. So on my radar, VHT, which I think is the Vanguard Healthcare REIT. I really had no idea how the market was going to react to all the changes that are coming. Well, at least on this healthcare REIT, we're seeing a test of the November 10th high, 131.69, 877,000 shares. Got tested just a few days ago on January 10th with 270,000 shares. Volume increased a little bit to the downside, pulling back up. I'm going to kind of get an idea of maybe how healthcare is doing by watching these REITs, but there's not a lot going on out here in some of those. Now, there are some other ones I wanted to get to before the end of the day. I think Anthem was one of them. This one banging around its highs, again, on about the same volume. So some of these stocks look like they have the ability or even the inkling to try to break out here in the next few days. Nice move down lower today and a move back up to this previous high. Volume is okay from that December 20th out here, but watch for breakouts in ANTM shortly. Akamai, what do we have in this one? Another one. Now this one is up against a longer time frame when this thing gapped down on massive volumes. If you were looking for a short possibility, I would like this one probably at about $73. This gap down on monstrous volume, and that monster volume is about 21.8 million shares. We're back up into that gap right now with 2.2 million shares yesterday. Kind of bounced back down. A lot of times, especially now, as we watch in a market that we're off 5 points on the S&P cash here. Volume just 2.5 billion shares, though, as we're closing out the show. If we're going to roll over, I'd love to see a spike in this thing up $2 or $3 on no volume. As many of these stocks do have, there's a double gap up here right at about that $73, and that's probably where this thing's going. And at that point, you'd make your determination if that is one to go back and test this high volume low back on February 9th of last year that had 6.7 million shares and never tested. In the meantime, sell when you can, not when you have to, and we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.